Welcome back to Calvo Mateo, where we go deeper than the headlines. Today we're answering the question on every trader's mind. Are the shorts on BMNR completely trapped, and is a massive squeeze about to begin? While retail investors panic over the lack of standard revenue, the smart money is quietly loading up. At first glance, this looks like a wild speculative gamble, but underneath sits a balance sheet foundation that flips the entire risk-reward equation on its head. We're breaking down the cold hard numbers to find out whether BMNR is the ultimate asymmetric buy of 2026. If you're serious about catching setups like this before the crowd, do me one quick favor, smash that like button and subscribe to Calvo Mateo right now. It takes 1 second and it tells me to keep these deep dives coming. Now, let's get into it. To understand why the standard metrics are so misleading, we have to look at what this company actually represents on a fundamental level. To put it simply, BMNR is not a traditional tech company. It operates as a giant corporate digital asset treasury vehicle. Instead of sitting on a pile of cash, they've built an $11.4 billion balance sheet backed by the world's largest corporate Ethereum treasury. But here's the twist. Unlike a passive trust that just holds digital assets and collects dust, BMNR is actively staking their holdings to generate a massive $250 million annualized yield. And to make this setup even more explosive, they have over 42 million shares sold short, representing more than 7% of the entire public float. It looks like the ultimate asymmetric trade, a multi-billion-dollar asset-backed floor sitting right underneath a tightly coiled short squeeze trigger. But before you get too bullish, there's one hidden metric buried inside their capital structure that completely alters the true net asset value, and we'll expose it in just a moment. But to understand where this stock is going next, we first have to trace the chaotic steps that brought us to this exact week. August has been an absolute technical and emotional rollercoaster for BMNR shareholders. Under intense broader market and crypto sector pressure, the stock gapped down to an intraday low of $16.63 on August 3rd. But within just 4 days, it staged a spectacular rally, slicing straight through $18 and peaking at $19.31 on August 7th. Of course, nothing goes up in a straight line. Broader digital asset pullbacks and geopolitical oil spikes dragged BMNR back down over 4%, bottoming out at $17.98 on August 14th. But look at this resilience. On Monday, August 17th, the stock surged over 3.6% to close at $18.73 and is continuing its steady upward grind today, pushing toward $18.91. So the real question becomes, is this just noise, or is this the calm before something enormous? Here's where the story starts to get more complicated, because these wild swings weren't driven by random noise at all. What we're really seeing is a direct reflection of a high-stakes tug-of-war between powerful macroeconomic tailwinds and stubborn regulatory brick walls. On the bullish side, we had a major monetary policy shift on August 7th, when US labor data unexpectedly shed 23,000 jobs, collapsing interest rate hike expectations almost overnight. At the same time, BMNR's inclusion in the Russell 1000 index has created a constant stream of price-insensitive passive buying, money that has to buy the stock no matter what the price is. But those tailwinds slammed headfirst into regulatory friction in Washington. Investors were deeply disappointed when the Transformational Clarity Act failed to secure a Senate vote before recess. Then the SEC postponed its critical regulation crypto meeting, while crude oil jumped above $82 a barrel, reigniting inflation fears and dragging Bitcoin lower. So you've got the accelerator and the brake being pressed at the exact same time. Which one wins? That regulatory friction has capped the near-term gains, but the foundation backing this company remains absolutely rock solid. At the very center of the BMNR thesis is a staggering number, 5,815,164. That is the exact number of Ethereum tokens sitting inside Bitmine's corporate treasury right now. Valued at approximately $11 billion, this single holding represents a mind-blowing 4.8% of the entire circulating supply of Ethereum on planet Earth. They are now 96.4% of the way toward completing their ultimate corporate milestone, a target they call the alchemy of 5%. Think about that for a second. By building the largest corporate Ethereum treasury in the world, BMNR has effectively cornered a massive slice of the entire network. But here's the unresolved question that keeps analysts up at night. What happens to the price of Ethereum itself when this enormous corporate buyer finally completes its program and steps away from the spot market? Could a single company's shopping spree actually move the price of an entire global asset? And that brings us to the one question investors actually care about most. How does a massive digital vault turn into cold hard cash? This is where Bitmine completely separates itself from passive trusts like Grayscale or traditional spot ETFs. Rather than letting $11 billion in assets just sit there idle, BMNR actively stakes 87.1% of their entire treasury, over 5 million ETH, into native validation protocols. And they do it through their own proprietary infrastructure, the Made in America Validate Network, or MAVAN for short. Operating at a 7-day annualized staking yield of 2.61%, this validation engine is producing an incredible $250 million in recurring high-margin annualized revenue. Let that sink in. They have effectively transformed a volatile, non-yielding digital asset into a massive institutional cash flow machine that prints money while it sleeps. This isn't a company hoping for a payday someday. It's already generating serious income right now. That sounds incredibly impressive until you look at what's quietly happening underneath the capital structure. To understand the true cash flow, we have to trace their capital waterfall. And this is exactly where a lot of retail investors get caught completely off guard. BMNR recently issued 3.5 million shares of Series A perpetual preferred stock, trading under the ticker BMNP, representing a $350 million liquidation preference. These preferred shares carry a senior cumulative dividend rate of 9.5%, which creates a strict obligation to pay $40 million in cash dividends every single year before common shareholders ever see a dime. Sounds scary, right? But here's the real beauty of the math. BMNR's MAVAN staking revenue completely intercepts and neutralizes that entire preferred obligation. Once you subtract those dividends, the company is still left with over $210 million in unencumbered free cash flow, money it can pour directly into its aggressive common stock buyback program. So the very thing that scares away retail investors is actually being paid for automatically by the staking engine. But before you get too bullish on this cash flow engine, we have to zoom out and look at the rest of their balance sheet. If we examine their full consolidated balance sheet, Bitmine is sitting on $11.4 billion in total gross value. Yes, the Ethereum treasury is the massive anchor, but they also hold 210 Bitcoin and $78 million in cash, which they've been steadily drawing down to fuel those buybacks. And on top of that, they hold two major venture moonshots. First is a $180 million strategic stake in Beast Industries. The second is a $73 million equity stake in 8Co Holdings, trading under the ticker ORBs. And here's where it gets really interesting. Through 8Co, BMNR shareholders quietly gain valuable indirect exposure to over 300 million WorldCoin tokens, plus a $90 million indirect equity investment in OpenAI. So when you buy this one ticker, you're not just buying Ethereum, you're getting a massive diversified frontier tech portfolio bundled into a single share. When was the last time you saw a setup like that? But this brings us straight to a massive financial paradox. How can a company sitting on $11 billion in assets possibly trade where it does today? If you look purely at traditional GAAP metrics, the picture looks downright terrible. Trailing year's revenue is just $61 million, which means BMNR trades at a trailing price-to-sales ratio over 178 times. Trailing earnings per share sit at negative $4.50, dragged deep into the red by heavy digital asset impairments. On paper, it's a disaster, but the asset backing metrics tell a completely different story. BMNR carries an enterprise value over $10.5 billion with zero net debt, a current ratio of 36.7, and a book value per share of $19.23. At first glance, the stock looks like a straightforward bargain, trading at a discount to its own book value. But here's the catch that most retail investors completely miss. When you factor in that $350 million preferred liquidation preference, which takes absolute priority over common stock, the discount to net asset value actually disappears entirely. The truth is, BMNR is trading almost precisely at fair value. So the deep discount fantasy is off the table. So if the deep value discount has already closed, then what on earth is driving all this massive institutional money into the stock? The answer is surprisingly simple. Wall Street is using BMNR as a highly liquid, fully regulated, and yield-bearing proxy for Ethereum itself. Over the last 12 months, we've witnessed an absolutely incredible $2.81 billion in institutional inflows compared to just $121 million in outflows. Do the math. That's a buyer to seller ratio of over 20 to 1. The oldest bank in America, BNY Mellon, boosted its position by 36% last quarter. Weiss Asset Management increased its holdings by an astronomical 363%. Giants like Morgan Stanley, Marex Group, and Cathie Wood's ARK Investment Management are holding hundreds of millions of dollars in shares. These are not day traders chasing short-term noise. This is smart money accumulating BMNR because they want structural exposure to on-chain yields without the nightmare of self-custody. When the biggest players on the planet are buying with both hands, do you really want to be on the other side of that trade? Now, all of this fundamental backing is fantastic, but as active traders, we need to zoom right into the immediate technical battlefield. If you pull up the daily chart, BMNR is trading inside a remarkably clean ascending parallel channel. Ever since bottoming out back in June, the stock has been printing a highly consistent textbook pattern of higher lows and higher highs. Right now, BMNR is testing critical midline resistance at $18.80. And look at how the 50-day simple moving average, currently sitting near $16.20, has acted as a support floor made of absolute steel. On August 10th, the price cleanly broke above its 100-day exponential moving average at $19.09, marking a major structural milestone for the trend. Meanwhile, the relative strength index sits at a healthy 59, which tells us buyers are firmly in control and the stock still has plenty of room to run before it ever gets close to overbought. Everything here is lining up for something big. And this tight technical consolidation is creating an incredibly explosive dynamic the moment you overlay the short interest. This is where the story gets genuinely thrilling for momentum traders, thanks to a phenomenon I like to call float suffocation. Under their massive $4 billion buyback program, Bitmine has already retired over 20.8 million shares since July 1st. They are aggressively shrinking the supply of shares floating in the open market, while the underlying Ethereum treasury behind those shares remains completely untouched. Now flip to the other side. Short sellers are currently trapped with over 42.7 million shares sold short, representing a staggering $740 million in short volume. With days to cover sitting at a razor-thin 1.2 days and mandatory index buying from the Russell 1000 constantly chewing away at whatever float is left, any sudden upward move in spot Ethereum could force short sellers straight into a violent, self-reinforcing buying panic. Picture it, fewer and fewer shares available and a growing mob of shorts all racing for the same tiny exit at once. What could that do to the price? But to pinpoint the exact trigger point for this squeeze, we have to look directly at the options chain. The options chain expiring this Friday, August 21st, reveals a highly concentrated battlefield. Over on the put side, we see massive open interest clusters at $15 and $17, representing a heavy cushion of premium written by the bulls. But now look at the call side. There is a huge, densely packed gamma wall sitting right at the $19 and $20 strikes, with over 56,000 contracts combined. And here's the kicker. Near the money call, implied volatility is unusually suppressed, sitting between just 39 and 48%, which makes these call options incredibly cheap right now. So if BMNR's spot price breaks above $18.80 and starts marching toward 19, option market makers will be forced to aggressively buy common stock in the open market just to hedge their delta. And that, my friends, is how you spark a violent gamma squeeze right on top of an already suffocated float. So knowing everything we've just uncovered, how do we actually trade this setup over the coming week? Here is our exact tactical playbook for the week of August 18th through August 24th. For active traders, we're looking at a classic long breakout play. Your primary entry trigger is a clean daily close above $18.80 on high relative volume, ideally north of 35 million shares. If you prefer a more conservative approach, set limit orders on shallow pullbacks into the $18 to $18.20 range. From there, we're setting our first profit target at $20, which is both the psychological ceiling and the site of that enormous call wall. Our second target sits at the upper channel boundary between $22 and $22.50. And to protect your hard-earned capital, place a firm stop loss down at $16.90, a level that would represent a breach of the parabolic SAR and signal a genuine trend reversal. Discipline here is everything. The setup is only as good as your risk management. But what about the bigger picture? How do we value this thing over the next few years? For long-term strategic investors, BMNR remains an exceptional, yield-generating cryptocurrency treasury play. Think of it as a self-compounding capital allocation flywheel. The staking income earned on MAVAN funds the common stock buybacks, and every buyback permanently increases the amount of Ethereum backing each and every share you own. It's a machine that quietly makes your slice bigger over time. The core metrics you'll want to monitor going forward are MAVAN staking utilization, the velocity of those weekly buybacks, spot Ethereum's price action, and the bi-weekly short interest updates. And the ultimate wildcard remains the spot price of Ethereum. If ETH breaks sustainably above $2,000, it would act as an immediate revaluation catalyst for BMNR's entire book value. Now, before we wrap this up, I have to be crystal clear with you. Everything I've shared in this video is for educational and informational purposes only. It is absolutely not financial, investment, legal, or tax advice, and I am not your financial advisor. The price targets, squeeze scenarios, and trade setups discussed here are speculative opinions, not predictions or guarantees. Trading stocks and crypto-related equities carries a very real risk of losing money, and this stock in particular is extremely volatile. Never invest money you cannot afford to lose. Always do your own thorough research, and please consult a licensed financial professional before making any investment decision. So here's my question for you, and I genuinely want to hear your answer down in the comments. If the shorts really are this trapped, do you think BMNR triggers its gamma squeeze before Friday's expiration, or do the regulatory headwinds slam the door shut first? Drop your prediction and your exact trade setup below. I read every single one. If this deep dive brought you real value, smash that like button, and if you're not subscribed to Calvin Mateo yet, now is the moment. Hit subscribe and turn on the bell so you never miss the next breakdown. Thanks for watching, and I'll see you in the next one.